Good afternoon, ladies and gentlemen. A warm welcome to you all for attending our Inside Forum, New Economy Series, exploring digital finance, current landscape of stablecoin, e-RMB, and RMB Internationalisation. My name is Iris Kong from the Foundation, and your MC for today. Let's start off by taking a group photo together. May everyone please look towards our photographer on stage and show us your best smiles. As our photographer will be taking a few photos, please kindly remain as still as possible throughout the process. Thank you. Thank you so much. May we now have the pleasure to invite our speakers and guests onto the stage for a group photo, please. May we have Mrs. Rita Fan, Special Counselor of our Hong Kong Foundation and Council Member of Hong Kong Clinicals Institute. Our keynote speaker, Mr. Evan Young, Advisor of our Hong Kong Foundation and Group President of Animoca Brands. Mr. Michael Lau, Chairman of Consensus. Dr. Jamie, President of our Hong Kong Foundation. And Mr. Kenny Shea, Vice President of our Hong Kong Foundation and Executive Director of Public Policy Institute. Thank you so much. Please return to your seats. Mrs. Fan, may I invite you to the stage to deliver the opening remarks, please? Thank you.
I'm a bit short. I have to raise myself. Good afternoon. Mr. Evan Oyo, Mr. Michael Lau, Dr. Jane Lee, distinguished guests and friends. A very warm welcome to all of you. It is my honor to deliver this opening remark as for today's Insight Forum, hosted by our Hong Kong Foundation. I'm delighted to see so many familiar faces and also new friends gathered together here, united by a shared curiosity and commitment to the future of our society. As we gather in this vibrant city, Hong Kong, a place where East meets West and tradition meets innovation, I'm reminded of the unique role our community plays in shaping the dialogue around progress and opportunity. Our city has always strived on diversity, resilience, and an unwavering spirit to embrace change. We do recognize change, adapt to change, and seek change. Today's event is a testimonial to that spirit, bringing together thought leaders, industrial experts, and passionate individuals to explore the evolving landscape of finance and technology. To our audience, thank you for joining us. Your presence reflects a deep interest in the issue that will define our future. Whether you are here as a professional, a business leader, or simply someone eager to learn, like me, who knows nothing absolutely about this subject. But we are all happy to be here to explore the evolution of finance and technology. To our audience, thank you for joining us. Your presence reflects a deep interest in the issue that will define our future. Whether you are a professional, business leader, your engagement is what makes this forum worthwhile. I would like to extend a special welcome to our distinguished speaker, Mr. Evan Young and Mr. Michael Lee, as well as our very young leader, who will introduce himself to you later. But all of you, you have given your time generously and share with us your expertise. I'm sure your contribution is invaluable, and I'm certain your perspective will inspire meaningful discussion. At our Hong Kong Foundation, we believe fostering open dialogue and collaboration. Our mission is to serve as a bridge, connecting the world, connecting people, ideas, and opportunities for the betterment of Hong Kong and the whole region. In these times of rapid changes, and we all know where the changes are coming from, it is more important than ever to come together to listen and to share and to learn from one another. So today, we embark on this journey of exploration and exchange, and I hope you will participate actively. Thank you very much for listening to an old lady. Thank you.
Thank you, Mrs. Fan, for the opening remark. Please be seated. As Hong Kong continues to shape its position as a leading digital assets hub, this is a valuable opportunity for anyone interested in digital finance, money trend, or how regulations shape the way we use technology in our daily lives. Moving on, let's welcome Mr. Evan Young onto the stage to share the insights on the current landscape of digital finance and global trends. Mr. Young, please. Thank you.
Good afternoon. Good to see everyone here. I'm more used to a group when we come here as advisors, it's like a U shape, so we can actually exchange more. But I think given that we're a panel later on, so I'll take questions last. What you normally like to do is if anything that you disagree with, then you can actually raise your hand. But mark your questions because it's about discovery today. Now, I just want to tell you about my own background. My own background is that I started with finance first. Then I was at management consulting, and I guess I was at KMB as deputy CEO for a while, and I ran an expert network firm, and I'm in technology right now. I'm still figuring this thing out, right, in terms of blockchain and the potential it brought. Animoca as a company, as a cyberport company, cyberport born and raised in Hong Kong, we started with gaming. And then we discovered blockchain and believing that gamers, there are 3 billion of them out of about, 7 billion, the citizens in the world. So 5 billion of which are on internet, 3 billion of the 5 billion actually are on gaming. And we believe that if you spend time on the internet, you will ultimately want to own your digital asset. So we discovered this as a company and believe that Web3, which is using blockchain to own assets, is really the future. But how do we get into all the way from here to sort of like stablecoins? It's sort of our discovery. But why am I saying this? Is because this is still a matter of discovery because licenses haven't even been issued yet, and there's already a lot of speculation. So ask your questions. There are absolutely no dumb questions today, okay? Because I might not even know the answer myself. But we're definitely in the process, working with HKMA the last 2 years already in the stablecoin license. Okay, so I'm going to start all the way back, okay? I'm going to assume that not everyone actually fully somewhere. Okay, fine. I can walk. Can maybe this can be taken away? Yeah. Okay. So who actually is quite familiar with Web3, blockchain, and all of that? Who would say that? The supply chain person leader would say that he knows. I would not be surprised. Who else? Who actually trades or have? There we go. And you as well. Sorry, I forgot your name.
Joe.
Joe. Yeah, that's right. That's right. Okay, well, great, great. Who has either dealt with or owned digital currencies or Bitcoin or anything? Anyone own like Bitcoin or some sort of digital asset? Okay, well, you have to admit it, right? I'll say this, okay? In terms of asset allocation, almost anyone would tell you holding Bitcoin as a diversification, like 5 to 10%, you can say 1 or 2% if you want. It's pretty essential. Because if you look at currencies from 1970s onwards, it always depreciates because of the ability of governments to print money, especially US dollar being a reserve currency. It goes into why there's stable coins, about the system, how the finance markets stacked up, and also why Bitcoin goes up, because it's a scarce asset. Anyway, I'm not here to talk about Bitcoin, okay? I'm here to talk about stable coins and sort of what's happening in finance, right? Starting all the way back, right? Web 1, Web 2, Web 3. Remember in the days in Web 1, we were actually saying, for those of you who remember this in the mid-90s, who actually needs the internet? Because I can go to the library to find information and talk to people to find information. When I graduated from college, I did not have internet. It wasn't, I had to go to a computer center, just my age away a little bit. But sort of, I didn't have connectivity from my room. I had to go to a computer center to do email. I'm not even on email, right? And then people were saying that don't transact over the internet because they're scams, right? Don't give your credit card away. Where are we today, right? Nothing. You cannot not look at your phone for more than an hour. I'll be very surprised that you can have pay attention to all this without looking at your phone for the whole seminar, right? So that's where we are today, right? Web 2, what did it do? You could read in Web 1. You can start writing in Web 2. What did that actually do? We actually transformed the world of politics after Web 2. Mobile commerce on the tip of your finger. You can actually write, share news, like newspapers, politics, everything changed because you can now manipulate sentiment, right? It's literally that. What's Web 3? Web 3 is ownership. You can finally own something on a blockchain because a digital asset can be written in blockchain in an immutable way. Therefore, that's the third iteration. Has it found its use case yet? I would say not fully. And this all the way goes from kind of like Bitcoin being a reserve asset that maybe you should diversify into, all the way to stablecoin, which you can use, and to a lot of applications within Web3, which are actually going to come, like decentralized identification, like supply chain and all of that, right? So what's fundamental about what we believe in Web3, right? Is that in Web 2, it's already about network effects, right? If you think about what you're on, you're probably on some or all of these, right? You're on Google, Apple, Facebook or whatnot, right? And they are all sort of its own kingdoms because they do not share data amongst each other, okay? And you might say that that's okay because I get free maps and all of that. People, you cannot go somewhere else to another country and drive or do all of that without Google. It gives you free stuff, but in exchange, what do you give? You give out your data, right? Now, just want to imagine the future, what it's going to look like. If you're in these digital assets, you're in these ecosystems and you're creating data, in the world of AI, which it's not a topic for today, imagine that AI agents actually would understand fully who you are. This is coming, absolutely coming, right? Because AI agents are going to do investments for you, going to buy groceries for you. This is really what is going to happen, right? Imagine that it can't go across any of these and all the data actually belongs to the data giants and not yourself. How do you actually live your life in a way that is meaningful to you? Because the data, you don't own it. Now, that's the premise. It's a little bit kind of maybe theoretical for a moment, right? But that's what you believe in. You have to look at the future in terms of how it will be constructed. That's ultimately what technologists are about, right? Would it actually happen, right? At the end of the day, you have to look at the trends, right? We believe it's going to happen, and therefore, this is the Web3 is the infrastructure that will enable the next wave of technological change, which is ownership, which eventually will go into stablecoin at some point, right? This is what Web3 looks like. Web3 is about interconnected ecosystems, right? Every one of these token ecosystem can work with each other in a permissionless manner. You own it, and it's completely immutable, it's unhackable, and it's completely connected. And it goes into sort of like things like decentralized identity. I don't know if anyone have heard of that, about the data that you create, you can own it yourself, right? So what is ultimately what is public blockchain? And when we're talking about a stable coin, you're actually talking about a stable coin that exists on the public blockchain, right? As opposed to like a central bank digital currency, which would be existing in a private blockchain. Now, public means public permissionless. meaning that you do not need permission to enter into that particular blockchain to build and to create applications, because that's the infrastructure that's built, is validated by the public via incentives, right? Like Bitcoin is mining reward, Ethereum is proof of stake, and you can look into all that stuff, right? So what is it? Decentralized, immutable. Unless you hack 51% of the nodes within the blockchain, you cannot change what is on there. And that's the credibility about decentralization. So decentralized, immutable, permissionless. That's what it is. So therefore, it's permanent. It's permanence. Every transaction is permanent. I'll go easier. I'll be less technical later on, right? But we believe, ultimately, we're looking at two systems right now. And Hong Kong is in one and the other as well, what I call native Web3. Native Web3 is what I would call sort of Bitcoin, Ethereum, big applications, crypto trading. That's native. Institutional Web3 is stuff like real-world assets tokenization, stablecoin, anything to do with financial infrastructure that is going to be changed. That's native. And I would argue, or any mocha would argue, that you need both in order for the system to thrive. What is native Web3? Just for example, just putting some old logos here in case you recognize any logo. It's really about an access layer like a wallet, like applications like gaming, like Sandbox. We're the one that incubated Sandbox. Decentralized finance, right, which a lot of people tap. Collectibles like OpenSea, like many other protocols as well, the IPs. And then you have financial services. You have sort of like you have Node API providers, or you have oracles. Lots of stuff happening here. Now, one thing I'm actually worried about is how Hong Kong talks about the native Web3 side. Hong Kong talks about the native Web3 side like there's only Bitcoin and speculation. It's not true. There's a lot of stuff happening, a lot of innovation happening, just like what happened in the early 90s internet, what happened in Silicon Valley. You can argue many of these companies will not make it, but that's not the point. The point is, does Hong Kong want to attract this ecosystem here so that innovation will take place here? Now, whenever the government is pushing for Web3 and stays away from this, I get very nervous because this is where the innovation is coming from, okay? We have to go after institutional Web3 because we're an institutional place, but what is the US going after? I don't want to be geopolitical today, but there's no way to avoid it. US is going after everything, including institutional, and they have the flow, and they have the people. Now, you may have your opinions about Trump and what he is doing in the world, but he legitimized the space. Therefore, the innovation, even though you might feel that he is not proper or even corrupt and all of that, by means of enabling his layers, his lieutenants below him, will make this legitimate. And the lawmaking arising from it will keep on happening until U.S. is in the leadership position. There is big competition for this, ultimately. Do we want innovation here? If you look at sort of like Chinese or Chinese-made technologies, right, in the Web 2 world, talk about Tencent, you guys go to Shenzhen to shop, right, or eat food and all of that. You cannot survive without your Alipay or your WeChat and all of that. And who's leading the world in EVs? China, right? Think about how good this, part of the world is in innovation. And think about just saying that, oh, I'm afraid of this thing, I don't know this thing, therefore I'm going to give it up to the Westerners. No way, come on, right? That's like, I really need to make this point very clear before I go into stablecoin. This is a very important ecosystem. It's all right now made elsewhere. We need this here, okay? So the way I look at this is that, what do you need? You need to attract like big global leaders, company, relocate some of the teams here. Michael may talk about later on, bullish, again, kind of Western, but really Hong Kong native, bringing that liquidity to Hong Kong. And that's really important. But there's a lot of struggles that we have about having liquidity here. Having awareness of this, and also the enablers about having regulatory framework, having the right capital, friendly policies, et cetera, so that you can spur the innovation. Now, that's sort of all I'm going to say about the native side. I'm going go to the institutional side, and I'll go into stablecoin a little bit, right? Institutional side, stuff that you guys are maybe much more familiar with, is that what can blockchain do to fundamentally do an evolution across different sectors? And it's across almost everything that you can see, right? Supply chain, obviously one of them. But the most obvious ones are going to be financial services, which we're going to talk about today, and retail, consumer, tourism, which we can talk about as well. We're in education as well, and real estate tokenization, trade and logistics, about creating supply chain transparency. We can talk about that as well. And if you deep dive into it, look at financial services, you can look at payments, right? Cross-border payments over blockchain, much more efficient. Our RWA, real-world asset tokenization, 24/7 liquidity, instantaneous settlement, trade finance, mortgage lending, decentralized finance, which is a native application, actually, that's happening right now, lending, borrowing on-chain instantaneously using your collaterals, consumer tourism. I would argue that in ticketing, 3 to 4 years from now, maybe, hopefully, there will not be a ticket that is not issued on a blockchain because it doesn't make any sense to issue it anywhere else. You can track the data. It's in your wallet. It's immutable. You cannot just wong it. How do you say wong now? You cannot yellow cow it, okay? It's like kind of like it's in the, and then also it tracks your loyalty, right? And it's your own data, right? And so loyalty is in there. Decentralized identity is a very deep topic that we can. I really hope you guys talk to AI about decentralized identity, because we have a big asset called Mochaverse on decentralized identity as well. It's about portable sort of identity. It's about KYCing once. Just as I mentioned, right? How many times do you have to open a bank account, let's say with Citi, with HSBC? It's all, you completely redo your identity, right? And you cannot carry it cross-border every single time. It just doesn't make any sense, right? You have to have a institutional decentralized identity solution in the age of AI, in the age of sort of like Web3, right? So sort of like, anti-counterfeiting as well. Now I'm going to stablecoin a little bit. It's kind of going a little bit crazy, right? You guys sort of, if you track the market, anybody who says that they're going to stablecoin just rips, right, in terms of stock, right? Just give you some numbers. We were talking about this yesterday. I don't want to talk about other people, but we just did a piece of research with an executive committee yesterday. We talked about what stocks are going up. And if you look at about, so it's like, these are not small stocks, right? You're talking about Guotai Junan, you talk about China Renaissance, right? Some are smaller. But if you look at just kind of like, announcing kind of like just doing a type 1 digital asset uplift, 4x, this is not cryptocurrencies. This is a stock, right? Think about the euphoria that's going after this space, right? Why are people kind of like, why all this money rushing into it, right? And China Renaissance has been crypto, pretty native crypto for a while in terms of like going about it. Some that are doing treasury strategy, meaning going after Bitcoin treasury, went up 7.5 times, right? And yeah, a lot of money to be made, a lot of speculation as well, right? But what is behind all of this stuff? Right? It's really around sort of the narrative around stablecoin. So this is where we are at. How are we participating in terms of Animoca is that we have a JV with Standard Chartered and with Hong Kong Telecom. In forming our JV, we'll talk about that later. And then we were talking to HKMA when they were doing the pilots for the CBDC, which is central bank digital currency. There's a difference. I'll talk about that later on. And then we believe that the way to make sure digital money in the future will be utilized will be stablecoin, right? But there are really 3 types: stablecoin, central bank digital currency, and tokenized deposits. There are 3 digital currencies on the blockchain, right? There's a difference here amongst the 3. I'll explain stablecoin first, and then I have a slide on what the 3 of these are, what the differences are. So what do we expect? This is basically a fiat reference. Fiat means like money that we're used to. It's algorithmic, cannot be done. There's algorithmic stablecoins as well for those who are familiar. And it's a reference to any currency, which means that the license allows you to not only issue in Hong Kong dollars, but any other currencies as well. that allows Hong Kong to, again, maintain its position as a global financial center under a blockchain future. And it's not a security, which for some of you may be meaningful. So the stablecoin bill was passed in LegCo and published in the Gazette. That was just happened. In August, the ordinance will come into force and HKMA will officially ask for applications. Now, I was talking to reporters, and people were asking, oh, there were like 40 or so interested applicants and all of that, right? I think right now, the number is probably closer to 200. Yeah. Last I heard is 120. But because people are doing those crazy stock plays, I think there will be 200 applicants, right, or more. But I can't tell you how many licenses because I'm not HKMA. But that is not good for the ecosystem. And stablecoin is not it's not for speculation. Stablecoin is really for usage. So it's a piece of financial infrastructure that you want Hong Kong to do well on because it's in service of the future digital economy, right? So anyway, after August, accepting applications, HKMA would then go into completion of the application process and license and then go live. Maybe Q4. There will actually be a stablecoin, right? That is the proximate time frame. But the authorities already said that it will be 個位數 license, a few licenses, okay? So it won't be all 200. Therefore, I'm also saying that don't speculate on those stocks, right? It's narrative. All right, so who are the sandbox participants, right? You would, I shouldn't say this, but you might expect that the ones that are in the sandbox to have a better chance of the license, right? And why did they pick these three? I can't really comment other than sort of being a personal opinion. But Jingdong, you guys know JD, you might have purchased goods there. Even their internal payments and their own ecosystem, they have needs for stablecoins, right? Just make them more efficient. RD is a JV with Hashkey, with various other shareholders. They're native to the space, therefore they're one of them. And then the third is us, which is Standard Chartered, Animoca Brands, and HKT, right? So those are the sandbox participants right now. Therefore, in saying that, oh, we're going to do a number of licenses that are small, and then there are hundreds of them going to apply the licenses, most of them won't get it, right? And they shouldn't be in this business anyway, because this is a piece of infrastructure that you need to be committed to running, not as a business, but as a piece of public infrastructure that you will sustain. And I'll even argue that since we're the only one with a bank, and there's a reason for it. Why wouldn't first of all, the question is, why would Animoca go into it? Well, because we're early in everything. We believe this infrastructure is very important, not only for global infrastructure, but also for Hong Kong. And some people are also saying that, hey, everything is in US dollars right now. Why do you even care about the Hong Kong dollar stablecoin? Well, because Hong Kong dollar assets are actually very valuable, right? And we believe that if you have a bank actually understands financial infrastructure. And so Standard Chartered being a partner to us is great. And why Animoca? Because we're native to Web3, and therefore we understand use cases. And why HKT? Because HKT has tap and go, they understand retail. So we didn't go in alone because we believe that that's a combination that needs adoption, right? That explains maybe us, right? So this is where we are. Finance company, Web3 company, retail company, right? So we believe there's infrastructure across consortium. And people ask, how do you guys work together given that you're so different, right? You have a conservative kind of a bank, you have a really, Web3 company that's native in it, and then you have like a traditional Hong Kong company. I can tell you that we work great together because we are so different, right? Right? Because we're so different, it's kind of like, well, banks will be very conservative, and sometimes even within Standard Chartered, it's like, hey, Animoca is impatient, right? Let's go. And we can push the process forward, right? And say, oh, maybe we can push that. And also, we see how it can get adopted, right? Because we sort of like, hopefully we're able to see the future a little bit. Rather than being sort of conservative and saying, what's finance plus, we'll look at completely deconstructing the ecosystem and saying that this is what future finance looks like. Maybe it's actually valuable, right? HKT obviously super sort of like on the ground, know what the retail wants and all of that, right? So we believe this is a great combination, right? That's a JV company. In terms of 2025, I think what's going on in the US, is worthwhile looking at, right? Meta, right? Looking at sort of like considering stablecoins for payments. Visa, Master, by the way. Visa and Master were so against this, but Visa and Master, actually via stablecoins, their business model will be very, very disrupted because of this. Because they charge, what, 3%, right? And yes, you earn airline miles and all of that, but through all these inefficiencies of payment, so they're deep into this right now, right? Because they understand they're under threat. And then the Stripe was acquired Bridge, right? There's a Paxos launcher, stablecoin, Ripple has their own, BBVA. You can see Standard Chartered, that's with us. Lots of stuff happening in stablecoin market. This is equity investment. These are less speculative, but you look at the moves. This is the real stuff that's happening, right? Okay, what is a stablecoin? Again, digital asset tied to one-to-one to a reference currency. So we all know that the banking system is a fractional reserve system, right? There's a reserve ratio because not everyone who deposits money in there needs to withdraw at the same time, so therefore the bank lends out the majority of it. That's the nature of banking. Why is this stronger than banking in a way and safer? Because it's backed one-to-one, and it's regulated, right? Now, people were saying when we went into this, why go into stablecoin? Because it's already a very mature market, right? USDC, USDT, all of that has been in circulation for a long time. But to us, it's very new because no one has regulated stablecoin yet. That puts Hong Kong at the forefront. The Genius Act actually is what is putting pressure on us, which is the US Genius Act on stablecoin, is what's putting pressure on us to act faster overall, right? So what happens is that you have what happens is that if there's a buyer, it needs to put the equivalent Hong Kong dollar to the issuer, then you issue after the Hong Kong dollar is exchanged, and then you receive, the buyer will receive the stablecoin, and then the issuer put these assets into reserve. Now, in the unregulated space, it does the same thing, except you have no transparency over how this asset is actually being managed. So if they go and 買股票炒樓, you just don't know what they're going to do with it. Here, HKMA is saying that, okay, sorry, everything in Hong Kong dollar or maybe US dollar because it's linked, short term, so you have to have liquidity. That's why regulated is so important, right? And therefore, we feel we're actually early in the regulated stablecoin space. Okay, so right now it's 99% US dollars. So people are asking us, why Hong Kong dollars? Well, because the regulated space, people haven't even explored this. We believe that ultimately stablecoins will dominate the world in sort of foreign exchange trading because this settlement, everything is 24/7, and therefore this is the future. If you look at sort of USDC, USDT, and there's other box, right? You can see that that's growing in terms of like trading. A lot of people just look at the trading side in terms of like USDC, USDT being the two largest stable coins. But you look at the categories of sort of like other categories of how it is being transacted is already growing beyond just crypto trading, right? Which is the original use case. Okay, so very dense here. USA Genius Act. EU has MICA, we have our stablecoin bill, right? It's pretty much similar in many ways, right? But it's all going in the regulated direction, right? At this point, all going in a regulated direction. One thing that is interesting to note is that the US regulation actually allows foreign stablecoin issuers operating in USA. There's no equivalence in Hong Kong or Europe, actually. So if you're doing any issuance activities, you have to have a Hong Kong license. What the Circle USDC are saying is that if it passes sort of US standards, it should be able to issue in Hong Kong. And Hong Kong HKMA says, no, you have to get a license here. And therefore, what I'm saying is that there is absolutely regulatory competition on stablecoin. And if your issuance, ultimately, this is about a financial infrastructure competition, ultimately, right? And if you're successful in having more Hong Kong dollar stablecoin as a usage as opposed to US dollar regulated stablecoin, you have much more of that financial language and liquidity dominance within a global financial system. So I cannot emphasize how important this is to Hong Kong. In the last OHKF presentation, I say that this is a matter of national security. And I'll say it again. This is neutrality of financial infrastructure. Think about how much, if we talk about just 99% of stable coins being US dollars, we think about the amount of international trade that's through US dollars and the SWIFT system. And think about the weaponization of dollars, and think about how Trump wants to balance trade. Okay? If you're balancing trade, does it mean that you're no longer importing as much? That's what you're saying. Then therefore, you're not exporting US dollars as much. What's going to happen to US dollars, right, as a reserve currency? You automatically already know that directionally, we're going towards more bilateral trades. Would you want, as a financial system, given geopolitics, a system that is US dominance and on SWIFT that can be turned off? We have done that before, right? US has done that before, turn off US dollar for Russian assets. You also all have feelings about like these kinds of things, but when I look at it as a technologist perspective, right, you need a neutral financial infrastructure that is immutable, that's not controlled by a country. That is what we need, right? And we're talking about RMB asset tokenization. Why are we interested in this? Because using the stable coin, ultimately, it neutralizes the financial system, which is the same thing as technologists saying that we need a neutral internet because it belongs to everyone, okay? So anyway, so a lot of adoption. I'm not going to go too much into this. In terms of use cases, there are lots, right? Initially, it's crypto trading, right? If you want to buy cryptocurrencies, people park in, first use your US dollars, park in US dollar stablecoins first, and then buy Bitcoin, Ethereum, Solana, whatever, right? And then more and more now on and off ramping, now P2P payments. I don't know, that's why I'm asking, like, who of you have actually any stable coins or worked with any cryptocurrencies? When you pay people, when some of us native pay people, we actually just get your wallet out and we just transfer it to you on the blockchain, right? Because it's instantaneous, right? You can still do pay me, but US dollars, you do cross-border payments, what's fastest? Blockchain, right? That's where you do cross-border. So that's what we do. And then you have B2B payment, tokenized money market funds, like BlackRock, just have tons of money market funds, Franklin Templeton, right? Tokenized money market funds. Cross-border payments, that is a big use case, right? Think about if you're an SME and you are doing a lot of sort of your importer of certain commodities, you're buying, let's say you're Chinese and you're buying, iron ore from Australia, and then you actually need to pay in Australian dollars. What do you actually do? RMB to US dollars to Australian dollars through 4 corresponding banks, and you lose 3 to 4%. What happens if you have pairing stable coins? It's exactly on that price, and it's instantaneous. You're paying a blockchain fee, which is very, very minimal, right? So that's one big use case. All the other stuff, programmable, all of that. The more you study it, the more you understand that this is really how the financial infrastructure is actually less efficient than the blockchain one, and that's why the adoption will be there. Okay, so stablecoins, CBDC, and tokenized deposits. What are these, right? Stablecoins is a public blockchain infrastructure regulated, right, to be regulated, that will be referenced one-to-one to whatever currency it is in, right? That's stablecoin. I think we explained this. What's CBDC? Central bank digital currency. That is issued by the central bank of that particular domicile, right? Hong Kong dollars will be done by HKMA, RMB, or there's an e-RMB as well, basically on private blockchains to facilitate central bank to central bank trading, central bank to banks trading. But if you're a consumer or corporate, would you actually adopt this? Initially, they were thinking, the central bankers feel that yes, they would. But there's no privacy here because everything is actually on chain. So do you want to show central bank everything that you buy? Probably not, right? So therefore, the use case here is really for large, institutions, central bank, but consumers can still adopt it, but we don't feel that adoption, given the availability of stablecoins, would be adopted as much, would be as wide, but still an application. Then there's tokenized deposits. Tokenized deposits is literally just your deposits, like JP Morgan or Citibank, whatever. You just tokenize that, right? Within that, but because banks cannot interact with the public blockchain, it becomes private blockchains, then therefore they can trade amongst each other, but it will bring them liquidity as well. But would you trade tokenized deposits outside because in private blockchains? It's, again, limited applications. So for us, we see stablecoins as the most important financial infrastructure coming. Everything else will still help. CBDC will still help. Tokenized deposits can go into public chain in some ways. It will still help. But right now, the thinking is that stablecoins is really the next thing, right, in terms of tokenized money. Okay, I'm not going to go into that too much because we also have a panel as well. So how are we thinking about it, right? This is stuff that it's interesting. Project Peak is our name. So what we believe is that we will not all the way go to the end user. We will use distributors because it's about getting the adoption. It's about, because Hong Kong is about KYC, about sort of AML, all of that stuff. We would distribute through distributors. That would actually, we already identified use cases, but they will distribute to end users, okay? But the economics, this is what people don't really understand about stablecoin, is that stablecoins are non-yielding, which means that if you mint it, you don't get an interest after you receive a stablecoin. That's how you earn money. Now, one thing that maybe the issuers don't fully understand is that the economics actually goes mostly to distributors, right? So Circle distributes through Coinbase, and a lot of the interest that is clipped is actually Coinbase clip it, right? So it's not like everyone is fat and happy. You need to have the learn, right? You need to have the quantity of quantum. That's why when we talk to HKMA, it's like you have to make licensees issuers successful because the margin is very thin. And the thinner, the better, right? Because you don't want people to be fat and happy about this, right? You want people to work hard to get the liquidity up so that you can be a infrastructure to Hong Kong's financial system and to tokenized tokenized assets for RMB, for China, for Hong Kong, et cetera, right? So that's where we are. So specifically, go-to-market, crypto trading, tokenized funds, remittance, e-commerce, Web3 ecosystem, domestic payments. I get asked all the time by reporters about what are the use cases. And that's not what I'm not showing, but I'm showing you guys. But it's not really that much of a secret if you dig into it, right? These are the use cases, tons of it. But if you add all of this stuff together and you go back to the last slide about this, you already know that there are just lots of use cases, right, about this, why this is important to us. Now, okay, I think about China and RMB internationalization. Hong Kong is obviously by far the RMB, offshore center, right? How is this going to help? At the end of the day, we have a linked exchange rate system in Hong Kong dollars, right? And RMB either goes to Hong Kong dollars or goes through US dollars, but Hong Kong dollars is pegged, right? And think about the enterprises that you yourself would talk to that would rather not use US dollars because of the risks involved. And if you have a Hong Kong dollar stablecoin on a neutral financial system, you already have a route to internationalize yourself, right? So that's why the adoption matters so much. And whether or not there's an RMB stablecoin is yet to be discussed. The market speculates a lot on it, but for the RMB, might belong to a panel, but for that to happen, you got to have a lot of offshore RMB in the first place because you need to mint it one-to-one. So we're not there yet, but you start with Hong Kong dollars, and because Hong Kong is a capital window to Chinese assets, this becomes a very, very important piece of infrastructure. Okay, so why stablecoin? Why is it better than Alipay and Octopus card? Okay, so again, I'm going to do Web 1, Web 2, Web 3 similarly, right? At the beginning, there is cash. We used to only do this, right? Wet markets used to do it. later on, and then Hong Kong is actually the first to do it, like cashless, right? I don't even carry wallets anymore. I don't have a wallet with me. In China, no one carries wallets, right? So when people are like, why does this matter? Well, you guys all know because you use it, right? So all of these forms of payments will still exist. Why is this the next stage, right? It's because you have a digital wallet ultimately, and it's actually, it becomes what you call tokenized money that allows you 24/7 access to global liquidity, global flows. So for example, right, if you want to trade US dollar stocks, right, you want to buy US dollar real estate, for example, right, you really need to open different bank accounts and go through different KYCs. But if it's all on the blockchain, you need your phone. That's it. And you can buy any assets you want if they're on-chain, right? And another thing that's important is that a quarter of the world's adults do not actually have bank accounts. They're unbanked. So if you're talking about your helper, right, she might not have a bank. They do Western Union that charges God knows how much. Future, you use tokenized money. No matter what amount you're banked, and by the way, banking system is on a day-to-day clearing basis on 5 days a week, right? So you get interest on a day-to-day basis or monthly basis, right? On-chain, you can pay you by the second, right? That's exaggeration, right? But at least every 4 hours is liquidity, right? Because any money that is flowing through on a 24/7 basis means that that capital can be deployed on a 4-hour basis, and anyone can tap on that liquidity, right? So the entire infrastructure of banking changes as a result of tokenized money that is 24/7 global. That's really the reason for this. And when you're connecting yourself to this, the world continue to push toward that direction of tokenized money. And also the other thing is, give you a very useful use case, at least for me, is that it's programmable, which means that I have my son studying overseas right now, and I give him X dollars per week on allowances, right? But he would go buy a bunch of stuff that maybe I don't want him to buy, right? But if I program it, you can only buy food or, whatever. They don't spend it on stuff that I don't want you to spend it on, right? Like shoes and all that kind of stuff. Why do you need so many shoes anyway, right? So tokenized money is important. 財爺俾錢你, right? You can,消費券and all of that stuff. I want certain sectors to sort of like, to be benefiting from this. I program it as well, right? And I can program it so that it's not effective until September, and it's only effective September to November, for example. So it's future of money, right? All right, last 2 slides, I think. Why shouldn't everyone issue a stable coin, okay? And sorry for very wordy text. I didn't create this slide, but it was important to educate why so it is important. First of all, it's not a commercial enterprise. This is infrastructure, right? It is possible to lose money in this business. Just as when everyone went in and want to get a digital bank license, everyone loses money, right? Because the economics is ultimately about thin margins and lots of volume. But the commitment matters a lot, right? And you do need finance capabilities, right? Because it depends on a lot of core banking capabilities. That's what we believe in. That's why we talked to Standard Chartered about it. And it's about risk control, KYC, counterterrorism financing, liquidity management, asset custody, compliance, and all of that stuff. A lot of banking roles is needed. We do not believe, right? Very self-serving, you can discount what I'm saying. We do not believe that this should be issued by tech companies, right? Because ultimately, are they going to use within their ecosystem, or are they going to make it a form of money? If you're going to make it within efficiency within your asset, within your ecosystem, just use one. You don't have to issue one, right? Which is my third point. You can use it. You don't have to issue it. Issue it is a business, and you have to be responsible for it, right? And it is highly regulated business, right? As I talk about it. All right. So enough of that. I'll talk about any local brands just quickly before I wrap. What do? We do asset accumulation because we are in all sorts of projects, and the projects have tokens that actually regulate those ecosystems. We're in operations, so we do tokenization services. We do digital ID. We do transaction flows. We are about 4.3 billion in terms of digital assets. We made about 300 million in revenue. So we're sizable. We might be the largest non-exchange type of Web3 company in the world, and in Hong Kong. And then we have about 600 portfolio companies under our belt. So we are innovative. We are spread out, and we are trying to innovate in this space and be early, right? And that's similar to sort of like just some numbers from us. Some of the stuff that we do in terms of accumulation is that we do have a lot of sort of advisory type activities going on, because what we want to do is to help digital asset ecosystems on chain that would be able to innovate. Some of you might have heard of Sandbox. Mochaverse is our latest, and we do have about 600 companies, right? So that's it. And we can go to the panel.
Thank you, Mr. Aoyang. Please return to your seat first. With groundbreaking development in stablecoins, e-RMB, and cross-border digital finance, we are witnessing transformative opportunities in financial inclusion and monetary system evolution. For our common panel discussion, we will discuss more on how these digital finance developments will reshape our financial landscape, from the strategic vision behind global cryptocurrency trends to the practical implication of stablecoin adoption, and the new opportunities for businesses and investors alike. So without further ado, let's welcome Mr. Evan Aoyang again, and Mr. Michael Lau, and our session moderator, Mr. Kenny Shea, onto the stage, please. Thank you.
So big thanks for Evan for such an inspiring talk. I'm sure lots of guests are eager to ask a question, but before that, let's keep the momentum going and deep dive into some important topics. And join the Evans on the panel, we also got Michael with us. So maybe let me talk with Michael first. I know Hong Kong proudly hosts the Consensus 2025, which is Condai's flagship annual event, and it was the first time for this global Web3 gathering was held outside the North America. So as the key person to make happen, can you share with us a little bit more about the mission and visions of the Consensus?
Yes, no, thank you so much, and thank you so much, our Hong Kong Foundation, for having me join. To answer the question properly, I think it's important to give you a little bit of context. I was born and raised in Canada, but I moved to Hong Kong in 2008, so I've been here for 17 years. This is home for me. My parents are from here as well. And so for me, I've always kind of built my entire career and had a love for this city. I spent over 10 years in traditional finance and moved into the crypto digital assets industry in 2000 with a group called Bullish to build what is now an institutional exchange and also one of the 11 regulated exchanges under the SFC. Just for reference, we are probably one of the world's largest Bitcoin and Ethereum trading exchanges in the world and do about 50 times more volume than the entire VATP of Hong Kong on a daily basis. So we're very excited about being here and providing effectively to Hong Kong an avenue to liquidity, right? But a year and a half ago, our company bought another company called CoinDesk, which is the largest English-speaking news for Web3 and blockchain. And they own a conference called Consensus. And for 10 years, they've been running this conference in the US. And my boss called me up and said, hey, Michael, you're the guy who loves Hong Kong. You're in Hong Kong. You always talk about Hong Kong. Why don't you bring Consensus to Hong Kong? And I said, I would love that. And for the first time in my life, there was both a work mission and a personal mission coming together. And when we did this, there was kind of a desire of, hey, we get to shape this the way that we want it to be. We have this great brand name. We have, I guess, kind of a reputation of being known as a conference that people care about the content. We have, the top minds, including Evan, who is speaking as well, there to really generate high-quality content at a scale of several thousand people. So we said, hey, that be the first part of our vision. The second part of the vision was to capitalize on Hong Kong's geographic positioning in the region, because within 4 hours, you can fly almost anywhere. And I thought, hey, why don't we think of Consensus Hong Kong as a gateway to Asia for all of our friends, industry partners, colleagues that are from other parts of the world. This is the place that you can connect to the entire region. But finally, the third piece of the vision was to showcase Hong Kong. And showcasing Hong Kong meant showcasing what we're doing as an industry, showcasing what's been happening here in terms of the innovation, what's going on, but also showcasing Hong Kong as a fun destination for hosting a conference. And so, as an example, whenever my friends come to Hong Kong, I usually say to them, if you're here on a Wednesday, what should you do? You should go to Happy Wednesday over in Happy Valley. Go see the horse racing, be a part of it. And I said, well, if I'm going to tell that to all of my delegates to go, why don't I just go and partner with Jockey Club directly myself? And so we actually hosted our official Wednesday evening together with the Jockey Club at the Happy Valley races this past February as just a fun way to showcase Hong Kong and really fulfill that vision. The outcome of that was we were sold out at nearly 10,000 attendees, of which 75% were from overseas. We had generated over 350 side events. So these are people on their own money, own dime, going out and hiring a restaurant, all the way up to the conference, the ballroom of the Four Seasons to host events during that week. And what's incredible is that when we kind of did all of our groundwork and estimation, et cetera, we estimated that we were able to, in that week, generate about 275 million Hong Kong dollars worth of economic contribution to the city as a B2B, business-to-business corporate event. And I think that was what was a really interesting thing, was to be able to kind of bring together and showcase that Hong Kong is this convergence of incredible amount of energy, business, as well as just a destination in and of itself. And so we were very happy to announce very recently that we're going to be bringing it back next February. And we'll be at the convention center, this time at the largest hall in the convention center, because we want to go bigger. So the vision is really to see Hong Kong succeed in our pursuit of being a Web3 hub. And as I mentioned before, bullish is meant to provide liquidity. The role of Consensus is to provide visibility. And the idea of having these two dimensions being able to push through, I think, hopefully we'll be able to contribute more towards pushing us in that Web3 hub position.
Thanks, Michael. I do hope there's more and more such global crypto and Web3 events hosted in Hong Kong, because it can definitely strengthen our international digital financial hub image. So our next question is to Evan. In your presentation, you talk about both stablecoin and also the central bank digital currency, which is called CBDC, just like ECNYs. So my question is, do you see the development of government-backed CBDC and private stablecoin as being substitute to each other, or could actually they play a complementary role in different applications?
I think they are mostly complementary. By the way, I actually feel that if you say stablecoin is a theme for Consensus 2026, it was sold out today. It's just so much speculation. I can't believe it. But by the way, it's just interesting that it's CBDC. Each has this use, right? Because when the innovators, the most native innovators, talk about blockchain, or you talk about some people call the Bitcoin maxis, they might talk about the entire infrastructure of finance being completely replaced by blockchain and all of that. Because I came from the traditional industries, I came from finance, and that management consulting and other industries. My view is that all of these change doesn't happen that fast, right? So the existing infrastructure needs to transition until there is more dominant forms of payment or infrastructure, right? So I think right now, China is probably the only place where if you, in taxi, pull out cash, they would really look at you funny, right? And in restaurants as well, right? If you don't have, you don't have the requisite. I think it's actually pretty difficult for foreigners to be doing this, right? So I actually believe, to answer your question, CBDC is really around central bank to central bank dealings, right? Without using US dollars, for example. Or you can use US dollars, but that is about large, group. So far right now with various initiatives that HKMA is doing, facilitating central bank to central bank type transactions, central bank to bank transaction. I think that's very important, because you might not want to use public blockchain infrastructure for these kinds of transactions, because you do want to track it privately, right? And it's more efficient. Tokenized deposits is a different thing. Tokenized deposit is about making your own customer deposits or even corporate deposits more transferable. So there's more liquidity amongst different banks. I think to me, that's the lowest use case. I think ultimately, for tokenized deposits to work, it needs to make itself in the public blockchain, ultimately coming back to maybe stablecoins, right? Stablecoins is clearly the widest use because of the efficiencies, because of the fact that it's on public blockchain, it's public permissionless, therefore the applications and the trust is going to be highest.
Okay. Thanks, Evan. So in your speech, you also mentioned RMB. So I will definitely go back to this point later. But first, I want to move to Michael, because every time we talk about stablecoin, there is always one question that pops into my mind. So let me throw it to Michael. Given the dominant use of certain stablecoin, just as Evan presented in the presentations, for example, like the USDT and USDC for the crypto trading. So how do you think the newly launched stablecoin provide incentive for changing people's habit from using the USDT and USDC, or how it can push for more real-world use, like payment, day-to-day transaction, or even broader financial service?
So breaking it down into two sub-questions. One is, how do new challengers compete with incumbents? And the second part would be, how do you get just more people using stablecoins? I think that, to a certain degree, it's a distribution thing when it comes to the first question. Distribution, as well as, I think, regulatory kind of boundaries will drive, for example, who's able to compete in certain places. And I think what you'll find is that when it comes to issuers, it's going to be kind of largely around those things. So if you're in a place where it's already heavily concentrated, USDT, USDC, then it's going to be a question of what's the other benefit from the user, or what are the distribution points you can get. If it's outside of that, then I think there's a little bit of blue ocean kind of strategy thinking, right? Which is kind of where Hong Kong dollar stablecoins fits into this conversation, because there isn't an incumbent yet on that one. And so it is a question of, how do you think about education? How do you think about distribution? How do you think about creating value and incentives? And part of that conversation will, I think, also be how do you incentivize, right? And I think that's something that is very clearly seen now, especially when you have somebody like Circle who has gone public, and you can see their public filings. For all the money that they make in terms of revenue, there's a significant distribution cost. So that's certainly part of the game. But I think that if you go to the second part of the question around just use cases and things that will help draw people to adopt stablecoins over time, I think in the language of innovation adoption, there's two particular things to consider. One is cheaper, faster, right? Something will likely displace another technology if it's cheaper or faster. And I think that, for many of us who are fortunate to, live here where our currency is stable, we have very efficient, payment, very low friction for day-to-day usage. It may not be cheaper, it may not be faster, or maybe it's not noticeable enough for you to think of that as a way to displace it. But if, let's say, for example, you travel to an emerging market, and 2 years ago I was in Argentina, people over there, they want to get out of their local currency as quickly as possible, right? For them, that use case is a store of value use case, not even a payments one. It's just they've been using the US dollar as a store of value for many years, now as a cheaper, faster way of getting to that US dollar. In the same way, I've also heard many people around that region say, hey, I buy commodities across the border and I need to pay them in US dollars, and it's hard to transmit. Well, here's another way of thinking about cheaper, faster. So I think that's certainly one thing to consider. The other thing that I kind of was alluding to is this idea of leapfrogging. So as you probably are familiar, back in the day, the example I was given was, I grew up in Canada. We used landlines. Everyone called each other using landlines, and then there were mobile phones, and people used mobile phones. But over, in some parts of the world, they just skipped landlines, went straight over to mobile, right? And so I think there's elements of that kind of adoption story, leapfrogging, that's going to happen. And I would kind of put it out there to say that I've got young kids, kind of around the 10, 12-year-old range. The leapfrogging is not going to be geographic, it's going to be generational. For them, they will grow up into a world where they've been playing Roblox and many other games for a long time. They understand tokenization, they don't need to be explained, nobody needs to sell them on this idea. We're the ones who need to be sold on this idea. For them, this will be as easy as an adoption, if they even consider it adoption. It's just the way forward. And so I think there's an element of that to consider also for all of us who are leaders in business and leaders in society, et cetera, to think of this as not just simply, oh, there's a near-term adoption story that has all these frictions to push, and there's people like us who are spending our day jobs doing this type of thing. But there's also a generation coming very, very soon where this is just going to be normal, and we need to make sure that we are addressing that future inevitability.
Thanks, Michael. We know that now the stablecoin is a workable option now. So let's move on to another technical question to Evan, because in your presentation, I know you really want to talk about it. So here is the chance. From a market perspective, so what currency do you think the stablecoin issued in Hong Kong should be pegged to? US dollar, RMB, or US dollar? Oh, sorry, Hong Kong dollar, RMB, or US dollar. It seems each option should have its own advantage. So which direction do you think make more sense?
That's actually a simple question that's very complicated, because within the JV, we discussed this and debated this a lot as well. So first of all, Hong Kong dollar is a must because it's the first. We have a bank. We have a note issuing bank, by the way. That is important, right? Because ultimately it's about allowing the impending tokenization of Hong Kong dollar assets and RMB or Chinese assets to be on chain. So that's a duty and also a commercial case to it. So Hong Kong dollar is absolutely, and we're the first, right? And we of course would be hopeful that maybe being a sandbox participant, there is a better chance of getting a license, right? So we're ready. We've been working with HKMA, but the US dollars have been heavily debated, right? Whether or not a Hong Kong licensed issuer should issue US dollars is a matter of view. Now, before Trump became president, definitely, worth considering. But would you want to compete with USDC, USDT, which are actually not regulated, but Circle is definitely going to regulated route anyway, as compliant as it is, and there's a lot of trust in that. So if you think about competing with that, right? But right now, with the Genius Act, you would expect everyone with man and a dog would issue a stablecoin in US dollars, right? So would you want to get into that space, or would you want to just partner up with somebody? Right? So you don't have to do everything yourself. And it's not about the greed. It's not about all of that. It's about what gives you the most flow. Now, then you're going back to sort of like other currencies. Well, there are other corridors as well. There's other corridors that may not be ready. For instance, Saudi Arabia, I guess a bit confidential. I know you're recording anyway, but anyway. We do talk to, we work with NEOM, right? And we do talk to Saudi Arabia about, hey, do we want to have a corridor on that, because they don't have stablecoin regulation. Maybe you take on the Hong Kong regulation first and do that, and then you have a stablecoin that facilitate direct trade, and you don't have to pass through US dollars. It makes tons of sense, right? So that's the conversation. There are other domiciles that have unregulated stablecoins because their regulations are not there yet. Now, then you talk about the CNY. Yes, that's the one that everybody talks about, right? But the RMB is not internationalized, right? So there's a domestic side and there's a international side. So for you to mint a stablecoin, again, you need the equivalent currency in RMB terms here to be minted so that there is that circulation. Is there enough out there? But what we believe is that if there are more and more of this neutral financial system that allows for RMB-based assets to be internationalized, then there will be more and more of this RMB that will become offshore, and Hong Kong is really the center for it. So when I say that as a matter of national security, I would really say this, right? Think about the 估值 valuation of US stocks versus Chinese stocks with equivalent earnings. You can talk about all this stuff all day, about to analyze about why there's why something is worth this or not that. But to me, there's a lot of sort of liquidity and inefficiencies that's happening today because US pension funds have to sell or not have Chinese stocks. But at the end of the day, if you open the whole system up and just let value be discovered in of itself, it's a completely different world. Now, I also talk about a quarter of the world's adults do not have banking. That is a huge deal because the collective layer of that it's also an investing community. Even if you have $10, you can invest it, right, in decentralized finance, right, in a wallet, and you can access, you can buy HSBC with $9 if it's tokenized, right? And that's a big deal, right? And you open up the entire investing public to the retail level to have a global liquidity pool behind you. So I can't answer your question. We know we are committed to Hong Kong dollars, but everything else is a matter of partnering. And then RMB, don't know yet.
Thanks. I know it is really a challenging question, but I think Hong Kong is probably the best place for explore different currencies opportunities. So for the next questions, I'm pretty sure it can draw everyone's attention because it is about investment. But especially you can see the Bitcoin just hit a record high this week. But I have to emphasize that we are a fintech, not an investment firm. So I need to change this question a little bit. Michael, we all know that there's more and more economies like US are starting to include digital assets like Bitcoin into their national reserves. So, but you also know the crypto market is really volatile. So do you think the HKMA should also start looking into doing something similar?
So I've been in here for now 5 years now in this industry. When I first joined, there was still, I think, arguably a question of what we refer to as narrative share, as in, what's the narrative of, for example, Bitcoin that people will really, really latch onto, and that translates into the use case. And it was maybe this payments, and maybe it's, store of value, et cetera. Fast forward to today, I think everybody has already kind of come to the consensus that store of value is the reason why Bitcoin has value and people are pursuing it. I think that if you look at that, and the comparison is often to digital gold, you have a very, very clear and transparent means of understanding the scarcity of it, and also, the ability for it to continue to be a viable investment kind of opportunity. So when it comes to the conversation of asset allocation, and that's the thing that's kind of where you're leading to, there have been a lot of very smart people, including this person here on the left, who said earlier that you should have some allocation in this space, because it's emerging and emerging and emerging that actually this is a very, very strong way of being able to store value. And so when it comes to people that are managing serious money, it's a question of whether or not there are other objectives that maybe take over more, priority, or if it's a store of value play that people care about the most. Again, this is not investment advice. This is something that I do as a day job anyways. But I think the argument has been made and has been clear, and it's being demonstrated by many people who are managing money professionally, that Bitcoin is now taking a position in people's portfolios at a small level to a large level. And I do think, for example, you mentioned countries. There's also a lot of companies that are doing it as well. I remember back when MicroStrategy, if you've heard of them before, they're probably the biggest example. Back when they had first started buying Bitcoin, the CEO founder went on a lot of podcasts and talked about why he was buying it. And the one example that he gave that I've never forgotten is he said, I realized that when you talk about real purchasing power, it was the equivalent of me taking all my money from the bank, taking all of those paper bills, putting in my backyard, and then burning a stack at a time every year and watching it disappear. And it was this idea that, when you think about how the purchasing power of fiat currency, is effectively inflated away for you, you do need an alternative. And that's where he came to the conclusion that Bitcoin was the best alternative.
Let me add a little bit to this, because there's a question that everyone will have, which is from a traditional lens. Why Bitcoin, why digital asset? It's kind of like, I cannot, by the way, I keep saying this, right? I came from a very traditional background. So I think very similar to how you might think about some investment, which is, I cannot discount cash flow this thing. I can't do a valuation in Bitcoin. What is it? Where's the natural value? Whereas in stocks, you can always say, I DCF, this is 23 multiple, this is 50 multiple, this is 100 multiple, at least I know what these things are worth, right? But all of this stuff is about sort of methodology, how we think about it, right? Bitcoin, I think, this is not investment advice, but you have to look at it as an index to the world, That's the way to look at it. So at any one point in time, this is not real estate, this is not anything, but this invention of money over blockchain is a new thing. And I struggled a lot with this. I'm just sharing with you. When I look at any digital asset, I'm like, why is its value this way? What is the point, right? Not all digital assets are equivalent, but Bitcoin is different because it's the first, it's the only real sort of, I would say, proof of work blockchain that is never going to move away from it. It takes a lot of energy. But the mining rewards will, because there's so much value at stake, the mining rewards has to keep the system up alive. That's why it keeps going up. There's a lot of natural buying pressure and the fact that you cannot create any more. And the other use case is that if you look as an index, if you believe that inflation will always be there, like especially US dollar as a reserve, as an inflation, now it's like, you know, I guess the US is inflating at about 3% a year. It was 6 2 years ago. If you believe that's 3% is inflation rate, and that's the index in which you believe a decentralized currency would come in, I would say that why wouldn't that be your allocation, right? At least 3% of it. If it works for you, then, you know, add more to it. Again, not investment advice. You don't have to do it. But the point is, you know, you can't really value it in that way if you look at it a little bit differently. It's an inflation, anti-inflation asset.
Okay. So I know everyone is eager to ask our panelists questions. So let's open up the floor. If you got a questions for our panelists, just raise your hand and our team will give you the mic.
Very good presentation and very informative. I have two questions. One is with the prospect of the stablecoin and the blockchain, it looks like that the issuers of the stablecoins in future may actually take over some of the major roles of the traditional banks. So would you think that the banking role will be marginalized as a result of this? My second question is, there will be so many stable coins to be issued by different territories. So how do we, as a merchant, choose which stablecoin to use for transactions in future?
So I guess the first question is about banks, right? So I don't think that stablecoins would threaten banks. First of all, it's non-yielding. So and it's non-yielding in all of these domiciles precisely because it doesn't want to replace banks. Because of deposit and lending, you don't want to upset the system, right? I believe stablecoin forces banks to look at banking infrastructure. That ultimately is what it is. And if you talk to bankers, there is sort of like, I'm repeating what Bill Winters said to us, right, when we were working with Standard Chartered. 50% are sort of skeptical, want to kill blockchain off that. 25% say that, okay, let's see what happens. And 25% actually actively adopts it. We're working with the 25% bank right now. Why? Because it does threaten the financial infrastructure because on a blockchain, all of this compliance costs, all of that, everybody knows is inefficient. So you can use blockchain. Supply chain, by the way, tons of inefficiencies because of transparency, because of lack of tracking, all of that stuff. And administration, insurance, for example, right? Lots of administration can utilize the blockchain. Does it threaten some jobs? Yes, it does. So does AI, right? But I don't think banks will go away because banks hire very smart people. They will slowly adopt the infrastructure via tokenized deposits, CBDC, then using public blockchains, right? It will happen. That's what I believe, first question. Second question was how merchants should choose. Well, for Hong Kong merchants, choose the Hong Kong one, right? You can, of course, choose the one that is regulated in the U.S. as well if you trust them. But, it's what that is, right? But I actually believe that the more important question for Hong Kong is that given that there's regulatory competition for which stable coin and all of that to exist, you want liquidity, right? Which is what bullish is about. You want to bring global liquidity. Without liquidity within a certain market, there is no financial market, right? So there's definitely regulatory competition. And I haven't talked about all the stuff that I really want to talk about, which is the problem of Hong Kong in doing all of this stuff around, granting of, VSP license. I'm sure you don't want to talk about it, but I think it's too many, right? I think digital banks are too many. And there are lots of issues with how we're thinking about stablecoins. Is stablecoin cash? Is stablecoins virtual assets because the reserve requirements are different, right? And there are a lot of stuff about adoption that we are not even thinking through. I think the regulator need to think in the Singapore way. Singapore is very together in terms of one single government doing a policy, pushing it that way so that it will work. I think because this is financial infrastructure, it's not just about the interests of private parties, right? It's really about making it work so that Hong Kong can be competitive.
So maybe given the time constraint, we try to take a few more questions, and maybe we can take all the questions together and then let the panelists to answers. Yeah.
Thank you. Very insightful remarks. I think everyone gained a lot. One huge difference between the US stablecoin market and the one that we are envisaging in Hong Kong, I think, has to do with the interest rate differential between US and Hong Kong. Everyone knows that the stablecoin does not give interest, and all the interest that the issuer earns on whether it's putting it in deposits or T-bills go to itself to cover operating costs, profits, and to the distributor. I read that Circle, after you go through its financial statements, will find out that it actually only made 2%, which means that, let's say the US interest rate is at 4%. That entire 4%, half of it is going to the issuer, half of that goes to the distributor. Now, in the case of Hong Kong, we're looking at a 2% interest rate. How is that going to be distributed? Particularly in light of the fact that the size of the Hong Kong market is going to be dramatically smaller than the US market, which in 2024 was around 200 billion. In 2026 is expected to go up to 700 billion. Hong Kong is going to be significantly less. I mean, there aren't that many Hong Kong government bonds, for one thing. Obviously, we can all be looking forward to the RMB participating, but still, with the size of the one-ton bonds, the dim sum bonds, and all that, it's a very, very small market, and hence I'm not surprised that MA is looking at, as you have described, single-digit number of issuers. But without that 4% profit margin, which US stablecoin issuers are enjoying, how are you going to tackle that problem from the Hong Kong perspective?
I have a very simple generic questions. With this kind of intensified payments across the national boundaries and borders, what would the impact on the tax regimes of most countries? Tax.
Maybe you do the tax. I don't know how to answer that. I think it's a good question, right? Because it's digital asset tax and all of that. So I really don't know how to answer that question. Right now, I think the tax regimes in Japan, for example, is to forego the tax, right? And Trump is doing something for us. I don't know what we're doing, to be honest. We have no capital gains anyway, right? So yeah, I think tax is also going to affect competitiveness, where Hong Kong is very, very strong with that regime, right? To Paul's question, right? You would need to talk about that more loudly, right? Because you're a very good voice to the government, to the rest of us, and it's very hard as a business, right? As you strip down Circle and all of that. So we believe the majority of the interest payment needs to be given to distributors, right? Ultimately, so it's a quantity game, right? And when it's a 2% and the lack of assets, that's why I'm saying that we're not there initially when we talk to the MA. We're not here initially to make money, but we definitely don't want to be at a loss. So we actually told the MA that if you're doing like 15 licenses, we actually don't want to do it, because you're not allowing us to win, right? And as a piece of infrastructure provider, we're like building roads, is almost, right? You gotta let us have a chance to make sure that that infrastructure is adopted, because if no one wants to play this game, this becomes a digital bank. This is very high stakes. I don't believe that digital banks, anyone from digital banks, hopefully not, I don't think it matters as much, right? This is really important to the country, to Hong Kong, right? Now, Paul, you can also say that, well, there's only that, I mean, you have tokenized green bonds, you have dim sum bonds, you have government bonds, it's not, doesn't matter yet. I also agree with you. There's no tokenized stocks right now and all of that. But do we believe that there will be more of that assets? Do we believe that ultimately China needs to internationalize all its assets and have value discovery on a neutral financial system? I believe in that, right? So it's coming. It's supposed to be coming. But if we don't have a stable coin, we can't have a neutralized financial system. We're back to the Genius Act and the US dollar system. And again, I would disclose this, right? I think we are feeling a lot of pressure, the authorities are feeling a lot of pressure as a result of the Genius Act. We're forced to make sure the stablecoin works. And the way it works is that you have long-term participants that actually care about the adoption beyond just commercial interest. And you might have to take a few years of loss. In our financial model, I'll tell you that there are different scenarios, including loss scenarios. So don't speculate stablecoin issuers. It's not like, you have to, and Hong Kong dollar is a small thing, right? Maybe it's RMB, maybe it's US dollar, maybe it's something else, right? We'll figure it out commercially, but initially, you gotta be committed.
Unfortunately, I don't have very much to add on that for either question, so.
Okay, thank you, Evan and Michael. So let's give another big round of applause to our two amazing panelists.
Thank you, Mr. Aoyang, Mr. Lau, and Mr. Shi for bringing us such an inspirational and fruitful sharing. Please return to your seats. As our forum has welcomed even more guests since we began, may I invite everyone, including those who have just joined us, to take another group photo together. Let's capture this wonderful moment with our full audience. Okay, everyone, please look towards our photographer on stage. Thank you so much. Before we conclude, our next event, Inside Forum, New Economy Series, What is Hong Kong's Position in China 2050 Space Blueprint, will take place on 31st of July, featuring Professor Quinton Parker as our speaker. You may scan the QR code to enroll now. We look forward to seeing you at our next event. Thank you all for coming today, and have a nice evening ahead. Thank you.